Hey, good morning, traders and investors. Todd Gordon here, founder of tradinganalysis.com, and welcome here to the Wednesday show. Hope you guys are doing well. I feel like I say it every week. Interesting markets, earnings season, a lot going on in Washington. Big sell-off yesterday. Of course, inflation is still the predominant theme that everyone's talking about. Massive debate out there whether inflation is coming and is imminent. Is it real? Are the fears unfounded? We have a pretty good rally here this morning. Futures back up after yesterday's slacking. That hurt. That really hurt. But yeah, lots to cover. All hands on deck here to start. So we'll bring in the team here very quickly. Updates, doing well. You guys been following along. I had knee surgery, full ACL, MCL, and meniscus about 2 weeks ago. Brace is off. I can bend it. I can kind of stand on one leg. So doing well. I'm ahead of schedule. Hitting PT hard, doing my at-home drills, icing it, all that stuff. Professional news, I scheduled my Series 65 for 3 weeks from now, and that will allow me to officially launch the money management business. And other than that, we're just trying to make sense of this crazy news flow that's hitting us so hard, and trying to take the fundamentals and the stories and the themes and the narratives that they're trying to jam down your throat, digest that and kind of grind it up and filter it through the charts, which is technicals, and figure out which way is up. And just a quick word before we dive in here. I've got some things I want to show you. I think it's so important to be, if you're anything above like let's say a day trader, and I mean, I hate how the word day trader has been mutilated over the last 20 years. A day trader was like when I started in the business, I was in and out of a stock in less than 5 minutes. That's day trading. Okay. If you're swing trading 2, 3, 4 days, you're holding stuff for a week or two, you have to understand what's going on the fundamental side. You have to understand the news stories and themes that they, quote unquote, the collective conversation that's happening on the internet and on TV is trying to tell you that's actually happening in the stock prices. And then you have to filter it through your technicals. So guys, especially in this kind of environment that's so hotly contested in Washington, on fiscal, on monetary policy, so much that's going on politically, you have to know what they are trying to tell you, and then figure out for yourself if it's actually being reflected in the chart. So I think you could see that, me personally, as I'm going into money management, and I'm really trying to steer trading analysis in that direction. Of course, I mean, we are one of probably the most prominent Elliott Wave groups for the longest time outside of Elliott Wave International, our friends at Elliott Wave International. But you're seeing more and more fundamentals, and I think that's just so important. And I think both, like good, healthy combination makes a good trader and investor. So a couple notes I have for you. We're talking about there's a lot of hesitancy in this market, and specifically NASDAQ, as I think, the inflation argument is roaring. We've talked about that a whole bunch, but I think tax policies, they're being proposed by Biden, are really starting to kind of impact some of the progress that otherwise would be going. I mean, they're talking about taking the corporate tax rate from 21 to 28%. It used to be 35%, so it's not as bad as it was. And there's a pretty good article this morning in the Journal about who actually bears the brunt of that corporate tax increase. And I think the thing that the fundamentalists are debating and going back and forth is who actually winds up paying for it. And I think they actually can agree that it's shareholders that wind up paying the cost, because what that's going to be is if they increase corporate taxes, dividends and share buybacks are going to be decreased. And let's face it, a big part of the rally that we've enjoyed over the last 5 years is corporate share buybacks. Okay, and those are starting to come back into favor. Inflation, just keep talking about that. Janet Yellen made some I don't know, I think kind of interesting comments that the Fed is going to have to raise rates to get a hold of, runaway inflation if Biden's $4 trillion in spending actually goes through. And she got taken to task on that one, and she quickly walked those comments back. I think that's weighing on it as well. And I don't believe that, we have massive inflation. Yes, asset price inflation, absolutely. But, let's kind of dive in from there. Bennett, I'll take the screen if you don't mind. If you look at, this is TIPS, 10-year nominal treasury minus treasury inflation protected securities. This is the break-even rate. So right now at the 10-year level, we're forecasting about 2.4%, which, the Fed is changed their mandate to say not only will we tolerate, but we'll really welcome sustained average inflation over 2% before they make any moves. We're at 2.4%. We had a big sharp sell-off into COVID, and then we responded very quickly. It's like an opposite and equal reaction back up. So it's kind of a reflex sort of move, as we were in a very strong economy pre-COVID. So, is this going to be sustained? Are we going to continue to push up? And I don't think so. I think there's too many forces at work that will keep inflation under control. We're talking about, deflationary pressures from technology, investors living longer. We've talked about that a whole bunch. But now in the let's call it the aftermath for now, we're approaching the aftermath of COVID. It's the supply side. It's people tooling down, scaling back production. And that's what's caused such a big demand for all of these goods that we're talking about: lumber, semiconductors. There's a lot of things. So that's the 10-year. Here's the 5-year TIPS. Kind of the same thing, 2.6%. So a little bit higher on the 5-year break even at 2.6% compared to the 10-year at 2.42%. And then I thought this one was interesting too. Let's take the Fed's preferred inflation gauge, which is PCE, personal consumption expenditure, and let's overlay PPI on the producer side. Okay, and I think this is kind of telling right here. Look at this. This is going back 10 years. Purple is the PCE, year-over-year change, and in orange is the PPI, the producer price index. Pretty good correlation here, but look at this just recently. Producer prices shot up. Okay, they shot up. Now, are they going to pass that off to the consumer? We're starting to see it, but is it going to close this gap? Are consumer prices going to shoot up this much? I don't think so. I think in today's day and age and technology and our ability to be intelligent shoppers with the technology you have available to us are going to give us so many options. I just went and bought a new pair of OC, those Swiss shoes. I mean, I was looking for one model. I was able to check 25 different websites for the price that I want. I found the cheapest one. Boom. So like technology is allowing us to compete. I don't think you can just pass off prices so quickly to the consumer. And once we get these supply issues taken care of, that PPI is going to come down and start to fall in line with where that is. So not really seeing it. All right, we had GM this morning. Good earnings, really good earnings. I don't think we're getting much of a response from General Motors. Let's take a look at that. They got their butt kicked when Ford announced a couple days ago here. So let me just go over to 5-minute. GM up pretty good there. Pretty good in the pre-market there. I think they had a very, very handy beat. Earnings have been really, really, really good. Amazing, almost like too good. So some facts and figures from the Wall Street Journal here. Halfway over earnings season, 87% of the companies reported better than expected earnings. Okay, and traditionally, on average, 65% beat the expectations. And this data series that the journal was reporting goes back to 1994. On that, usually 65% of the companies beat expectations. They beat by an average of 3.6%. Companies this quarter are beating by 23%. It's crazy. It's unbelievable. So yeah, we're seeing a lack of follow through in really good earnings, and it's a little bit interesting. So concerning possibly. Yesterday was scary. We're seeing a pretty good rebound back today. So, was it companies pulling ahead? I mean, that Apple quarter, if you guys really looked at the numbers, I mean, that was a home run. Unbelievable. And what's interesting is Apple, their services rather than their hardware, is becoming becoming like a greater and greater part of their revenues. I mean, it's not more than 15%. I think it's less than 10% right now. But the margins, the operating margins, are so efficient, and they're in an interesting battle here right now with Epic, which is the Fortnite game that they pulled off of Apple pulled off of the App Store, and they're in court now. It's supposed to last a couple of weeks, and that'll be very interesting, and that will be telling how Apple's services component of the revenue might fare in the future. So we'll be watching that. So that's that. Let's bring in the team here. Let's bring in Alex, Terry, and Bennett. Guys, good morning. How are you?
Good morning.
Good morning.
Good morning, Todd.
Just typing a little
What's
note
up,
here.
boys?
What's happening? How are you doing today?
I'm good. I'm good. What's going on?
Knee feeling good. Love to see it. Glad the brace is off.
Yeah, feel braces off, up and down the stairs. Feel good. It's amazing. Like, took the bandages off. I was expecting like a Freddy Krueger size incision in my knee. It's like this big. Like, there's 2 or 3 little holes, and they took my quad tendon. There's a couple different ways to do ACL reconstruction. It's either they take your actual tendon from your hamstring, they take it from the patellar tendon or the quad, or they take it from a cadaver. And quad is kind of a newer one. They did the quad, and literally they take about a half of the tendon that connects your quad to your knee. They take that off, and then they cut a hole in, and they made that my new ACL. Like, it's amazing what they do now. It's crazy. But yeah. So what do you think about the markets, boys? There's so much going on. I know Alex is jumping out of his skin, talk about crypto. Terry's got some really good stuff on the materials, which sector rotation, which I do want to talk about here, is real. Bennett's got a lot in the Elliott wave side. What do you think, guys?
It's been an interesting week. I think the S&P, the NASDAQ, and technology, the S&P tech sector, XLK specifically, we've got the possibility of a pattern at work there, I think, that could take us lower. I'm going to give the viewers some key levels to take away here in just a few minutes.
Nice. Before we do that, let's actually can you take the screen back but keep your voice? Can I take the screen back but keep your voices on? Is that possible, Bennett?
Yeah, sure. Let me have you jump in here. Right, and we're live with you.
Okay, perfect. So, guys, this is a RRG, relative rotation of the iShares MSCI Value ETF compared to the Momentum. And just so you know, I have those two up. So here are the holdings and the value fees holdings. So they're more stable companies that are not properly, but more conservatively valued. Intel, like AT&T, Micron. I thought that was interesting in Micron. GM, IBM, Citi, Target, blah blah blah. And then if you take a look at the holdings in the Momentum, it's who you'd expect. And of course, I have 47 windows open right now. The holdings in the value: Tesla, Microsoft, Apple, Nvidia, Amazon. So you get the picture there. And again, a lot of people are trying to tell us, and the markets are showing that we are seeing continued rotation into the reopening plays like materials, industrials, financials. But this is interesting. I'm seeing this across several different of these ETFs, which is everyone's saying value is massively outperforming and momentum is getting crushed. But I hope I'm not stealing your thunder, Terry. I read your pre-show notes. Watch this. This is a weekly. Okay, this right here, each one of these little dots represents 1 week. So we're going back to like February. So value is up in the top right, which is leading. Momentum is heading to the bottom left here, which is lagging. But look what happens here. Value's kind of fallen away. Momentum took a big dive here in April. But then look, we're starting to get a hook. We're starting to get a little hook up in momentum. And basically, markets rotate on a clockwise basis for the most part. Value's falling away and momentum is coming back. And that's the weekly. Let's get down to the daily, and I'll turn this over. I mean, on the daily, momentum moved from the improving to the leading back in last week, back on April 12th.
That was what was giving us our first inclination that we were seeing a little bit of return of growth. But Not quite. We're still not there. So I think we got another little orbit here to go, maybe a couple of more orbits.
On which
But
time
what you
frame?
show there on the weekly, what you're showing on the weekly, you can see the hook formed now, and so we just have to let that hook develop. And I think then as we start to see the momentum rising in those growth stocks, that's when we're going to start to see a bigger push in technology.
Yeah. And Terry's point, there's a long way to go between here to here. And we generally take that as a buy signal, guys. If we get from the lagging to the improving quadrant and then going from the improving into the leading would be a good signal. So just watch that. We have value actually falling away, momentum making a hook. So let's dive into the wave counts. Terry will be back with the sector rotation, obviously, and Bennett, get us caught up on the LA wave position.
Sounds good. Let's do it. Good morning once again, traders. Thank you guys for tuning in. So let's get into it, jumping into the hard right edge of the Motive Wave platform. So last week we were looking at two interpretations of the indexes. One which essentially suggested that the third wave that would pair up to the March 4th through March 18th advance had actually come to completion, and we were getting ready for a wave 4 correction. The key level that we were looking at last week simply involved a 127.2% external retracement of this decline. So the decline that unfolded here between April 16th and April 22nd in a three-wave move. A 1272 retracement of that took you up here to 4218. You'll notice we retraced all the way up to a high of, let's see here, 4218 and spot 78. So we got right up into the 1272 external retracement of that decline, and we did fail. So our key takeaway last week was if that level does hold as resistance, look for the move down towards 4100, potentially even 40 and a half. We are seeing a confluence of two key fib targets kind of supporting a move into that zone. So this is the S&P. There is a possibility, given the kind of nature of a fourth wave correction, that given the rebound that we've seen here in the futures market from yesterday's sell-off, perhaps this fourth wave is a little more sideways and will defend the previous lows here from the April 20th and the April 22nd low. So that's the S&P. And the S&P, I still anticipate resolving higher in a wave 5. Whether we resolve higher from here or a little bit lower down into wave 4 support doesn't really matter. I do think that we will see this fifth wave complete into the summer trading months. The area of concern for me this week, going into Monday, we were looking at actually the RRG of value versus growth. And as Todd noted there, we are seeing improving conditions on the weekly. On the daily, we did see value return to the leading quadrant. And when taking that into consideration with a pattern that I'm seeing in tech, semiconductors, and the NASDAQ, I see the possibility that we will have one additional kind of orbital, as Terry suggested. While that unfolds, perhaps we do see further downside in tech and growth stocks specifically. The S&P doesn't give us really any clear levels to help substantiate the idea that perhaps tech, the NASDAQ, and semiconductors do go lower from here. So typically I focus in on the S&P. This week I want to talk about the NASDAQ. So here in the NASDAQ, we've seen a 5-wave move from the March 5th low up here into the March 16th high. We got a 3-wave pullback that we identified for you guys into the March 25th low. We've seen a correction since the April 16th high in the NASDAQ that does meet equality to the wave 2 of the same degree. And simply put, that means the magnitude of this correction was equal to the wave 2 position. We also came very close to wave count and validation. And wave count and validation with a motive impulse is simply overlap between your two corrections. We typically look for clearly isolated corrections with an impulsive structure. So the way I'm looking to approach this market is as follows. If we are to hold yesterday's lowest support and see divergence to the upside, I'll look to anchor this wave 4 here in the NASDAQ and look for continuation in wave 5. If we were to break invalidation, wave count invalidation sets in at 13,297 spot 48. What's the count? How can we then have some sort of context to help support where the market might be going? And the count is basically what we were looking at back here into the March 5th low. And what that would look like is this. You would essentially have the move from February 16th into March 5th as a three-wave progression. And when we got into the March 5th low, the three-wave structure of this pullback helped us to substantiate the idea that we were going to continue higher from the March 5th low in either a new impulse or perhaps some sort of a flat correction. So we had three waves down. Three waves down is not a trend to make or break in this instance. And you'll notice we have what can be viewed as three waves up, because remember, this is 1, this is 2, this is 3. We're looking at this as possibly wave number 4, but if we invalidate this as a wave 4 position, the count that I'll be looking at is a flat, and a flat simply has three waves down, three waves back, typically to that 1272 external retracement, which you'll notice here in the NASDAQ, we got right up to the previous high and just shy of the 1272. So if you break wave count and validation, I'm going to be looking for continuation lower in a 5-wave trend here in the NASDAQ down to 12.5 potentially. So that's the NDX. Let's look at the XLK, because looking at the XLK, I'm on the blue count here in the XLK, you'll notice pretty much identical to that of the NASDAQ. We have a wave 2 correction into the March 25th low. We have a wave 3 rally. The wave 3 rally was just shy of 1618. And now we have a directional wave 4 correction that did demonstrate equality to wave number 2. We can also assign wave count and validation onto the XLK, which you'll notice we got pretty close to wave count and validation. So just like the NASDAQ here in the XLK, if I take you over to our yellow count, take a look at the structure. We have three waves down, three waves up, right to the 1272 external retracement of this decline. So if the NASDAQ and the XLK breaks invalidation of the impulsive structure, which says this is a wave 4 pullback, look for continuation in a likely flat pattern. What's interesting about the XLK and the NASDAQ is, based on what we're seeing on the RRG, the daily could support this C wave decline. We then see the orbital on the weekly return to favor. The last chart I want to look at is the SMH, because the SMH, similar to that of the NASDAQ, we've got a very similar pattern at work. In fact, here in semiconductors, we can no longer look at this as 1, 2, 3, and 4. We've already seen overlap. So you have three waves down, three waves back, and here we are, likely in some sort of a 5-wave decline. Now, I do anticipate wherever this corrective pullback does find support, that from there we see a move back to at least retest the high, if not set a new high. Remember, wave 5s can be truncated. Then we're up against the summer trading months, which could be a little bit slow and lethargic, so keep that in mind. All right, that's it for me. Back over to the team.
Not that I want to take the summer off, but it's been, I wouldn't mind a slow summer. I think the TA team could use a slow summer. What do you guys think?
I hope we have a lot of volatility.
Go away. I haven't seen that thing work in decades. So it's a nice little saying, but I haven't seen it play out. Every time somebody says, "Oh yeah, it's going to get nice and calm in the summer," we have a really active trading summer. So
yeah,
if you look at it, if you look at seasonality charts, I don't have one to throw up there real quick, but seasonality, May is usually kind of a low gain month for the S&P, but typically June, July, and August are positive months, so much more active than May.
Yeah, I was going to say, the only back in 2019 here, we had May of 2019, we enter a triangle, but we do eventually resolve higher. This is an interesting chart I wanted to leave you guys with really quickly on the S&P weekly. This is one of the charts that we were using to help give us that 4,200 plus target. You'll notice that the last time the weekly RSI set a high was January 2018. We then have the pre-COVID high. We now have an established trend line. We're right up into kind of against that. The other chart I wanted you guys to see really quickly was the value versus growth ratio. This is the weekly chart. You can see value has been underperforming growth pretty much since the credit crisis lows. We are seeing a little bit of an uptick, but just take a look at the previous instances, right? I've seen this chart kind of thrown around as like a decisive sign that we're going to see this shift away completely from momentum, but I think it's a bit premature.
That's funny. That's really good. Hey, Bennett, let's just cancel the commercials. We have so much going on right now. Let's just run them at the end.
Sounds good.
If you guys don't mind, throw a thumbs up. We're being brought to you today commercial free by ourselves. Hey, there's one thing I did want to show you guys. Thanks for laughing, Terry. Appreciate it. You're the only one. I put something. I actually have not. I sent it out to members. And this is, I'm watching the comments, and you guys are having a really nice debate in there, and getting pushed back and saying, well, how can you overlay Elliott wave? Should you be an Elliott wave purist? And how can you look at fundamentals? And how can you look at other forms of analysis, intermarket analysis, relative strength, which is rotation, and how can you do that? And we are not purely an Elliott wave shop, and I don't think you can successfully trade and invest being a pure anything. I really, really believe that. You have to use, W.D. Gans said it, you have to use everything all the time. I think Elliott wave, I love it, but it drives me insane trying to teach it and trying to get the investing community set straight, right? Like, I'm proud to say our company was the only company chosen by Elliott Wave International over 4 decades to represent them and trade live capital, which we do. And I'll show you my live portfolio as I always do. Elliott wave is subjective, and the fact that it's subjective makes it attractive and makes it something that we can embrace. If it was objective and formulaic, I would not have focused my entire trading analysis business, which has been around for a decade now, on Elliott wave. And Vasco had basically said what I was going to say, which you're exactly right in the comments, which is, it's subjective, so you need to use other filters and other forms of analysis to help you sift through the various possible wave counts, because very, very seldom do you find one chart and say this is the only wave count that it can be. A lot of people say, well, that's a downside of Elliott wave. No, it's a good thing. I love it being subjective, and you use these other things, and it's not the fundamentals themselves that will help us sift through the various Elliott wave counts. It's investor sentiment and reaction and prevailing theme and mood, that reaction to the data that's being put in front of us that helps us filter through the proper counts. So if data is super strong, but the crowd isn't quite reacting to data and earnings, and we start to see 1 or 2 possible interpretations of the wave count that's bearish, we're probably going to give that one a little bit more weight. I have a long-term chart, Bennett. Let me take it real quick.
Yep.
I am not bearish on this market. Okay. I still, here's, one of my accounts here. I mean, look, I've got XLK, Qs, and Apple. I've got, I don't know, probably, 100 grand, 100 grand, 90 grand, 80 grand, all of technology. I'm very, very long this market. And, if you look at the longer term S&P count, this is a very simplified wave count. I could show you the Dow to give you a little bit more history, but this is, for me, this is the only chart that matters for me. Coming out of the credit crisis low, 1, ABC running flat 2, big old wave 3 up to 2017. And then this was the most interesting, unbelievable, hotly contested correction, I think, of all time. And we still don't know for sure what it is. Is it a expanding triangle? Possibly. Bob Prechter and I kind of debated if this was a 5 or a 3. He was rooting for a 3. I was trying to make it a 5 because I'm a little bit more bullish. But it wound up being a 3. That's B, down in C, up in D, down in E. And now wave 4 is complete at the COVID crisis lows. And this was really interesting because the sentiment was that, oh my God, COVID is going to give us a bounce, but then the whole world was expecting a retest of the COVID lows, if you guys remember that. I put something out on Twitter. I'm saying, well, wait a minute. This is being, looking at the very extremely bearish sentiment that everyone is expecting a retest. I put it out on Twitter and said, what if this was the retest? And it was probably the most popular tweet I've ever written. It got a ton of response. What if it was a retest of the November 2018 lows? And Ryan Dietrich, who's my buddy, he's the head of LPL, he got it out there and he brought it back up recently. He's like, that was one of the greatest calls. So that's using, very complex Elliott wave correction to say that was the retest, up in 1, down in 2. And what if we're in the midst of a third wave? And this third wave just checked a pretty good zone of resistance into 4K, and it didn't even think about hesitating. We're through it. So the next zone of resistance is not until north of 5,400, 5,400 in the S&P. And if you look at the Dow, let me just pull up the Dow real quick. That's going to be equivalent to like 55,000. Let me just type it in here. I've got it popped out. But here's the Dow Jones, and there's more history, obviously, with the Dow. We go back on a quarter chart. Oh, come on. Come on, log scale. Not working. Anyways, if you go back to the Dow, I'm kind of falling on my face here. This isn't, for some reason, I flipped off a log scale and took my fib zones away. But anyways, take my word for it. The upside target is close to 50,000 in the Dow. So, I'm continuing to be very, very bullish. They are trying to jam this inflation coming down our throat. I've heard that for 10 years, and we're just not seeing it. It's kind of similar to Bennett's chart showing growth outpacing value, and just this little bump up. Everyone's saying, "Oh, that's the end of the growth trade." You got to keep the longer term trends in mind and not get so caught up in the short term narratives they're trying to throw. So anyways, let's throw it over. Sorry to take so much time on that. We got next up is going to be Terry on sector rotation.
All right, Terry, I'll pass you presenter. Let's jump into it.
I got it. Hello, traders. I'm Terry Long at tradinganalysis.com here with your weekly sector focus. First week of May. Can you believe that? All right. So last week we didn't talk about it, but the S&P set a new high intra-week on Thursday, but the week itself essentially flat trading. We had earnings seasons going on, and I really expected a little bit more excitement out of earnings season, and we didn't really see that up until just yesterday. Last week, S&P was essentially flat, only gaining 0.03. The NASDAQ was down a little bit more, but again, choppy trading, down about 0.5% last week. Now, despite that, or although the S&P went nowhere last week, look at the sector performance. Energy, communication sectors, energy was up about 3.9%, communications up 2%, and real estate here up about 1.25%. And on the downside, we had technology and healthcare down here. So yeah, so really had been waiting. We're about 70% through the S&P 500 companies reporting their earnings. And like I said, I'd expected a more dynamic response during the earnings season. Be careful what you wish for, you may get it. So before yesterday's decline, it just was mostly internal shuffling, I think, as the broad market moved sideways. And now we're getting a bit of a feedback here. But this week's price action looks to be moving in a corrective wave, with yesterday's pullback taking the S&P down about 0.39%, the NASDAQ down 2.28%. However, again, sectors gaining this week include energy, materials, industrials, financials, and healthcare. Here's financials, they're out of order there. And then on the decline is technology, consumer discretionary, and communications. So let's move on here to this. Got a new layout for you here, but essentially same information here. Got this list here of the S&P sectors sorted by relative strength ratio. And our leading sectors this week remain unchanged: energy, financials, communications, industrials, and materials. We've got the real estate sector now right about to move over here into the leading quadrant. So real estate, look for that pretty soon to be joining our group of leaders here. Now, 4 of the 5 leading sectors are higher in this week's price action. Energy is leading up about 2.8%, and the only leading sector declining this week is communications sector, and it's down 1.42%. Now, energy and financial sectors, they continue to show us declining momentum, but they are holding their relative strength position. And let's take a look here. If I click on this, there we go. This graph here should change. I'm going to go ahead and pop this out. This is the XLE. And the XLE had been in this decline since early March, mid-March. I think that period of correction may be over, because it looks to me like we found support. And this support here was back on this June 2020 resistance level, pushed that up, established that resistance level. That now, I think, going forward is our new support. Longer term uptrend is still in play. There's overhead resistance that needs to be challenged once again. The financial sector also is still running, still pushing to new all-time highs in a nice parallel uptrend channel. So no overhead resistance other than fib expansion levels, but you can see we came out of a correction period here, and financials are still running. So despite downward momentum, we can still have continued price appreciation here. Now, like I said, the communication sector gained 2% last week, but it did give back much of that in yesterday's decline. And although the weekly RRG is showing declining momentum, once again, the relative strength gauge is still seen outperforming the benchmark S&P. And I will note that looking at these line segments, there's a term in here called velocity, and the velocity is slowing to the downside here in the XLC. Industrial sector. The industrial sector is now showing us a 90-degree heading out here to the due east. And that is indicating that it is gaining relative strength position. Possibly it will eclipse the XLC and move up higher in the list here. So as a matter of fact, if you look at today's numbers, which is what I've got in this table, the XLI has already eclipsed the XLC. So I've got this, if we'll just make that rotation, this last little animation bit is just Monday and Tuesday's price action. And you can see Monday and Tuesday is pushing the XLC down here into the weakening quadrant, the XLI rolling over a little bit on momentum, but continuing to push to the right. Now, following along the heels of industrial sector is the materials sector. And I was noticing it looked to me a little bit like I was seeing some slowing momentum, slowing momentum rise on materials, but not quite. It's still accelerating into the leading quadrant here. And the vector heading is a nice about 60 degrees. So I do expect continued increasing relative strength in this sector as well. The materials sector will be the sector focus here in just a moment. Now, technology is still down here. It declined 2% last week. We're on another pace for a 2% so far decline this week. We're still waiting for that reversal hook formation, like what Todd showed us on his growth and value relative rotation charts there. I think on the XLK, we'll take a quick look here at the price action in the XLK, and I've got some funky looking Elliott counts here. If this was some type of a flat coming out of a larger correction there, then we could see a bigger correction. I don't think this is a preferred count, so please ignore that for the moment. But really what it is, we've got this overhead resistance that we run into around 144 here in the XLK. We're corrected back, bounced off the 50-day moving average. We'll see how this correction continues to play out. So, all right, the consumer discretionary sector, this vector is now seen with clearly rising momentum, but price action here in the XLY has been mostly choppy and sideways. I got this little yellow box drawn just around this zone to show you that we've been range bound ever since about April 9th after breaking higher up to another overhead resistance target, pull back up, down. So this actually could be a B, C correction. We might find the consolidation period ending here and then potentially get a move out of this. So if so, this is 1, 2, 3 sideways and 4. We have another push higher coming in 5 in discretionary. The healthcare sector is also seeing a period of rising momentum, and utilities and staples have they've joined the real estate sector up here now in the improving quadrant. And talk about the real estate sector. I've been telling you for the last several weeks now, keep an eye on this, because I started to see, with this rising momentum, northeasterly heading, real estate is staging itself to push itself into the lead. The trend turned to improving back here April 23rd. Last week it continued, and now we are breaching over right now with Monday and Tuesday's price action. We are bridging the gap from the improving into the leading quadrant here. All right, so this week's focus is going to be on the materials sector, as it has been trailing that industrial sector for several weeks now. Both of them pushed higher into the leading quadrant. Let's take a look here at the top 30 stocks by market cap, and that's where we've got here in the rotation. I see mostly positive northeasterly headings. I only see a couple of declining vectors. So for the majority, this group itself is gaining both relative strength and momentum. Now, Nucor Corp is a steel company. They have just overtaken Freeport-McMoRan to hold our #1 spot with the highest relative strength in this sector. Let me switch this layout here to focus in on the pricing, the price charts. It's a little easier this way. I'll give you a bigger price chart over here. We'll put the rotation down here. So I've been learning a few little tricks how to do things in Optima and make it a little bit easier here. So this is Nucor. Let's get Nucor up here. Yep. So Nucor has been in a sideways correction. That correction has completed and it's pushing now to new all-time highs. This level here was May 2008. Its all-time high resistance level at 83.56. So I see the uptrend continuing here in Nucor. It's got the highest relative strength. It will continue to outperform. There will be periods of consolidation as always, but in the longer run, this will be continued to outperform. Here's Freeport. And you can look here in this table. Right now, I've got them sorted by the relative strength ratio. And this column here is the percent change. So for the week. So this is a weekly tabulation, not just a daily. But we've got Nucor up 8.5% this week. We've got Freeport up 5.5% this week. LyondellBasell up 5.8%. Let me just switch and sort this by percent change. You can see Vulcan Materials actually moving up here quite nicely. Vulcan Materials beat on its earnings announcement and rose about 5% on Tuesday. We've got Martin Marietta. It's also up over 5% Tuesday after reporting its earnings twice as much as what was expected. I think the expectation was somewhere around 50 cents, and they reported $1.04. Martin Marietta Materials looking really good there. And Lyondell Basel also seen moving. Where's Lyondell? Let's click on Lyondell. Here's Lyondell. Lyondell mostly moving sideways here, but I am starting to see on the daily an improvement here as there's a blue candle there. I don't know how hard that is to see unless I zoom in on it a little bit. But yesterday, nice uptrend price. We need to break through this overhead resistance in Lyondell, and I think this period of consolidation here possibly will come over unless we need another little decline to finish this. So I can't say for sure that this is an ABC down and not a little bit larger flat correction. So I'm looking to this 110 level, a solid breakthrough there for a continuation in this sector. Let's switch over here to gold. I want to talk about gold. And Alex will cover gold also here in a moment, but this is how I'm following gold. We found our support level here at the 1680, and I've been looking at this only as a 3 waves up so far. I told you watch for a break of this mid-channel downtrend resistance level, and here on Monday we got a nice, really strong candle pushed right up above this mid-channel downtrend here. Let me turn this off. That's a little annoying, a little bit too much on the screen there. This mid-channel downtrend is being tested right now, along with another resistance level right here. So are we going to break higher? Are we going to fall back down into a correction? I tell you what, if you take a look at let's throw this up here. Whoops. This is the gold miners, and we've been following these guys. They've been in lagging underperformance mode for such a long time now, right? So really take the rotation all the way back till, this is back in October, right? In September, we had all of these gold miners in very strong positions, and then they all started rapidly tracing themselves, pushed down into the lagging quadrant, starting to gain some momentum, but it's been a long road to hoe. I'll tell you now, looking at where the vectors are pointing, there's a lot of northeasterly movement, and they're getting closer. They're gaining relative strength now, which is a good sign. And if this continues, I think gold is going to pop, and a lot of these gold miners are going to start outperforming. Let me sort this by relative strength ratio first, and we can see we've got First Majestic Silver. I think First Majestic Silver needs to find support level right here, right now. This downtrend needs to be broken. Haven't seen that happen yet. Here is Hecla Mining. Hecla's basically been sideways since August. I haven't seen that one break out yet. Here's Coeur Mining. A lot of choppy price action. It's a low-priced stock too, but a lot of choppiness there. So, but there are a few signs of some of these stocks starting to break through their downtrends, and Newmont is the first one here on my list that may be finding support now here at this downtrend channel. It is clearly broken through it, and we may be looking to go on the upside there. This one is Osico Gold, and I think this one's got a third test of this overhead resistance coming up. There's been 1 test, 2 tests. We're looking for a third test. Possibly the more times we try to test these overhead resistance, we'll probably eventually break through there. Here's Franco-Nevada. Here's another example of a stock that cleanly has broken the downtrend to the upside. We're now running above the 200-day moving average. The 20 has crossed above the 50. The 50 has turned in a northeasterly heading. And I think you've got an open gap here that says Franco Nevada is ready to run. Sandstorm, again, Sandstorm still just 3 waves up. Same kind of thing with gold. Need to break it, but we're cleanly out of this downtrend. So I think you guys get the picture there. What I'm focused on, and so many of these stocks just sharing similar patterns. And if gold gets a bid, I expect many of these mining stocks to continue, rise higher, exceed the overhead resistance targets systematically. That's all I've got for now. Back to you, Todd.
All right. Thanks, Terry. Yeah, that materials is real. You know, it's the rotation we've been watching is definitely real. You know, I've been looking at sort of adjusting my portfolios as we head into the launch of the money management, and something to keep in mind that you know, we got to look at the betas. You know, the movement of that relative to the index, and they're quite small material. So you just got to keep that in mind. If you're looking to make them part of your portfolio, you just have to make sure there's a large enough representation to get it to move. So 2 quick things before I give it over to Alex. I know you guys cannot wait to hear from Alex, but before we do that on the crypto side, guys, what do you think we just launch our own coin? I mean, can we do like?
I like it.
I mean,
I like it.
Might as well.
I mean, we might do the Alex coin. We got to come up with a better name, and let's just launch an Alex coin and send it from a tenth of a penny to 5 cents, and get rich. And what do you say?
I think that's a great idea.
We'll call it full send.
We're gonna call it when a thoughts fly, airplane, something like that.
What'd you call me?
Todd Gordon is flying.
Yeah, I remember.
Yeah.
No, I used to have that, man, but no more. Nobody cares about me anymore. I'm like practically retired.
Central
hey,
Bank
real quick.
Destroyed.
Let me take the screen real quick, Bennett. This news just came across. I just saw it. This is sad. CME Group.
Is that you?
Just wanted to say about this. Yeah, closing floors.
Here we go.
Sad. CME Group to close most of its Chicago pits permanently. Like, oh, that's sad, man. I got to tell you, like, when I first started trading in San Diego when I was 22 years old, it was in 2000, 2001. Like, we would listen to the S&P futures pit. Like, it was just unbelievable. I got to know some floor traders, went down there, man. Talk about, like, the most primal example of physical capitalism, and talk about reading crowd psychology, man. I mean, I got to know and stood in an office with guys who were multi-millionaires who barely got out of high school. You know, just street smart Chicago tough kids who could beat the crap out of any PhD quant and was probably a better trader than him. So I thought about going to the floor, but I just knew that time was past and the electronic markets were real. So I passed through a couple times, and that's sad to see that go. The other thing is, here's that Dow chart. It got screwed up to begin with. So that first zone of resistance in wave 5 was just about 31,000 in the Dow. You don't see the next cluster, which is actually very tightly clustered, until about 45K. Now, I'm not saying that won't come without some 10 and 20 and 30% corrections on the way, but that's the upside in the Dow. And then that's the only other thing I just wanted to mention. Oh, in the end, I do want to do a quick cannabis stock. There's some interesting cannabis patterns coming up. I'll do that after Alex. Then we'll wrap the show, but let's get to the doggy dog godfather of crypto, which I wanted to call him the Crypt Keeper. For those of you who are older, do you remember the Crypt Keeper in HBO, that guy who took it from Tales from the Crypt? I got voted down on that one, but anybody's old enough, throw a comment to remember that. Throw a comment and a thumbs up in YouTube window. All right, Alex, take it away.
Yeah, okay, guys, let's just do a little bit of macro quickly. Let's look dollar index, and pretty much the same picture. After these 5 waves down, we are still kind of muted here in a possible ABC or WXY on the upside. Dollar has been muted here in this possible correction for some time already. So I still think after some time of kind of a sideways consolidation, possibly even in triangle, we're gonna get this upside move in dollar before we start a new down cycle. Also, I have for you copper. Copper is kind of a tracing a potentially 5-wave move on the upside, potentially a little bit more, and then we might see some corrective pullbacks. And let's go now into the cryptos. And I have for you the Dogecoin now is fourth on a market cap. So Todd, Dogecoin is now 86 billion. Very close to Binance Coin, which is a crypto exchange with a Coinbase, one of the largest in the world, which is around 100 billion. We are struggling currently at the market cap in Bitcoin. It is around 1 trillion. It has been gone up to 1.2 trillion, and since then it fell down. And this chart explained that very well. This is a Bitcoin dominance chart, which means that the market cap against all of the altcoins on the other side is a Bitcoin. So we have been tracking this very successfully with our members. We noted that after these 3 waves down and 3 waves up, potentially we might reach this zone here, which we reached today exactly around 45.54. RSI is around 19, so I expect a bounce and probably Bitcoin to go on the upside. We have a long trade on a Bitcoin, and I'm waiting the Bitcoin to start a little bit more on the upside lead in the next couple of weeks. So speaking about the Bitcoin, we are going to show you our usual kind of outline, which we do in a crypto lab. So pretty much the same picture. So 5 waves up in 1, down in 2. We are monitoring this wave 3 and some fib ratios, which we usually look. This current consolidation is clearly possibly bullish with the outcome, still consolidating, possible ABC down in a flat, correction finish, we go up in next 5 waves, up to this 75-80K, or we're gonna spend a little bit more in sideways and then continue higher as long as this wave count invalidation at 44,000 holds with this first move down in a wave A. If you go down on a smaller time frame, this has been a pretty much kind of a 3-wave moves all around. So I have these 2 options here, potentially flat finished 1, 2, and we are going to get higher, or a more triangulation. We are long from 53 with a stops at invalidation level. So we are keep monitoring that. One of the things which spiked up very much was Ether, and Ether has kind of a also some of the very nice fib ratio between 4,400 up to 4,800, which kind of pairs up with this Bitcoin dominance chart. We might get a little bit more corrective in Ether, but then eventually I think as in Bitcoin, as in Ether, we're going to get this 4th wave pullback, possibly a very long one in a sideways consolidation, and then continue up towards somewhere between 17 and 20K on Ether in the years to come. So I think after this correction, Ether will have, as a Bitcoin, a very good entry for a longer term hold on the upside. I will just show you also the Dogecoin. And the Dogecoin is, as you know, kind of a meme. It's not any utility thing that you can use. And I heard just a few moments ago that you mentioned before we start the stream that Novogratz actually called it a middle finger to financial markets. So it's a kind of a Gen Z coin for a store of value now. It's even getting that name. And it's going up, I mean, as you can see, so pretty nice bullish structure. But I think very soon, between 0.69 and 1.3, we will start to correct downside. And it's going to be a pretty darn correction in a Dogecoin down to this, either depends if you're going to get a triangle or more directional one. But we are going to see also some of the long sideways price action in Dogecoin. Other altcoins which we track for our members, which are very viable projects consisting in an infrastructure of cryptos, are looking very bullish. And I will leave that tomorrow for the Crypto Lab if you like to see more. You can join me tomorrow on every Thursday. Actually, we do a crypto lab with Alex, which goes through some of also these additional altcoins, which are looking pretty nice, looking our charts. So my final take on a Bitcoin is, as long as we stayed trade below this 43K, I'm going to stay bullish, follow the trend up to this 75, 80K. Chart is pretty clear. There is not much of a kind of a debate here after a very nice move on the upside. A very vertical move in a third wave. We crossed 1618 successfully here, which was at 41K. Next one is 200. I really doubt that we are going to go immediately, as many of the market participants are calling that the Bitcoin might flow to this 200K immediately until the end of 2021. I think this semi-deflationary forces will kick in, inflationary, sorry, for the time being. And I have looked some other guys which are pretty big in macro over the years, and all of them are saying, although unwillingly, that they are very kind of in agreement with the latest Jerome Powell outlook on inflation on the last Fed meeting. That kind of inflation is transitory. We will see it for some time, but then the bigger forces of deflation, demographics, technology will kick in again and bring that down. So most of the macro guys are as well on that page, and I kind of agree with that. If you kind of observe all of this, what is going on in this unbalanced still economy. So I guess this will affect, and also agrees with this fourth wave pullback, which will take some time. We have some key time ratios here in a Bitcoin, but afterwards we have a pretty nice target also. But I think from these levels, Ethereum might be also a better bet after this fourth wave on the upside, because many things, many dApps are built on Ethereum. Also, smart contracts are starting to kick in many of the areas. So I must tell you, the crypto space is exploding with such a good projects which have a real utility solving problem in our world. So I think this space will be very, very much developing in the years to come. So back on you, Todd.
Good work, Alex. Yeah, the NFT market, the non-fungible tokens built on the Ethereum project are real. I mean, there's bigger and bigger influencers that are building these projects. I don't know if that's the right word, Alex, to use, but watch that Ethereum. The Ethereum Bitcoin cross is been interesting. And listen, I'm still the boss here, guys. And even though I got voted down, I really think we need to adapt this into Alex's new graphic. Can you imagine just putting Alex's face here, like Tales from the Crypto Lab? Like, you guys remember this show on HBO? Like, I was like 12. It used to scare the hell out of me, but I watched it anyways. Like, I mean, it's perfect. Get Joel to do this. He's our designer. I want it done. No excuses, okay?
Oh my God. Can I decorate
in and have it morph in and out?
I need to decorate.
Alex, he had the most evil laugh too. I don't know if the sound will come through or not, but I'll play it quick.
It's sound. I get it.
Oh my God! I'll throw it in the chat. Okay, so that.
Yeah, we can actually play that sound between the charts on the. Yeah, listen.
Crypto Lab. All right.
Yeah. Listen, what I call a project, it's basically what you see on this crypto stuff. Just to be more kind of a precise, it's a written code. It's a code which performs an action, which are basically irreversible. So. Right. Interoperability, it's one of the things which is developing fast, which means that there are many of these projects now which are going to connect the fiat world with the crypto world. And that's becoming more and more interesting. So it will be a kind of a smooth, in a couple of years, you will be able to switch between one and second space much more easily than you do now. And I looked some of the things are on Cardano project. It's amazing what these guys have done there. So I think this crypto space, it's going to be a kind of a next generational technology also bull market that we are going to see with the tech stocks in the next 10, 20 years. I'm sure about it.
Yep. All right. Good work. Good work as always. Be sure to catch Alex tomorrow, 9 a.m. in the Crypto Lab Keeper. If my team steps up, we're going to have new graphics ready to go. Let's see. So just giving you guys a markets open here for already 23 minutes. Holy cow. What's going on? NASDAQ is up about 0.6. S&P up 0.3. The root. The Russell is flat, even though I've been showing a lot of outperformance here. Crude continuing to act bid. Bonds and yields are kind of flat, kind of not going anywhere in recent sessions, so that's fine. Okay, so I told you guys I just do some cannabis. There's been a little bit of play there. The Aphria and Tilray merger went through. I think APHA, which was a really strong symbol, stopped trading yesterday, which is too bad because this guy was showing some really, really good relative strength. So a lot of these cryptos have pulled back after that huge move up in February and done some iteration of an ABC down into support. And it was a nasty sell-off. I rode Tilray all the way from the teens in the 70s, still have it back into the teens. But these are obviously very volatile, but the pullbacks I think are viable. So APHA no longer trading, unfortunately. But the pullbacks are real. So that's that. Tilray is a little deeper of a pullback here. It still could be argued that it's a wave 4 compared to this. Wave count and validation is 12. Spot 1.4s are trading about 16.5, doing a little bit of a double bottom. Not really seeing evidence of an impulsive move. Actually, no, I'm wrong on that. We are seeing an impulsive move up down in the 60-minute. You could scratch 5 waves out of that, followed by an ABC pullback. Actually, that's looking pretty good right there. It looks like we're double bottoming on the 786. Did we get that deep? Alt 3, no, Alt 2, sorry, Alt 2. Yeah, we did double bottom on the 786. So that's viable. Tilray. Grow generation, I was watching this big old extended triangle, which I hate this. It kind of dipped below wave count validation on GRWG. It's so tight. Maybe I won't throw the baby out with the bathwater, but really need to hold above 40.5 in GRWG, looking really good on the upside. So Tilray, let's see what else is moving here today. And I'm gonna wind up in the couple ETFs that I'm gonna put in front of you. MJ is not the strongest cannabis ETF if you want to trade an ETF. It's kind of going sideways again. It's sort of the same thing. You could put a triangle on the end of MJ. I forgot the exact name of the MJ ETF, whatever it is, but it's gone into pretty good triangulation. You could put a D and E on the end of MJ and say we're about to move higher. I think the relatively stronger, and I know the relatively stronger one is MSOS, this ETF. It's got a shorter history, but we have broken through some downtrend channel resistance right at about the $41 mark. So this one is interesting, coming out of an ABCX, ABC down into support. You can see it doesn't have the history that the other ones do. It just goes back into late 2020, so it wasn't able to get a first and a second and a third and a fourth. That's fine. And that's one of the challenges of Elliott Wave, is to put a wave count on something that's only been around for a year or 2 or 3 or even 5 years. Elliott Wave really needs to be applied to the indexes that go back 100 years. But through resistance, looking pretty good there. And I think cannabis, on the back of New York legalization and all the with Biden being in and the acceptance and a lot of companies are tooling up, and this federal legalization allows the Canadian companies to start to migrate down and start to list on NASDAQ and NYSE, and that opens the door. So it's a slower process, but looking pretty good there. STZ Constellation owns 37% of CGC. Oh, tell me if I'm wrong. No, Kronos. Which one is it? Help me. Save me, guys.
Yeah, it's Canopy Growth.
It's CGC. Okay, right.
Yep.
I got it mixed up. They own 38% of that one. And the biggest competitor will be the newly formed Tilray and Afria. But that's a major competitor. Also pulling back in a pretty good support is CGC. But I think Constellation, STZ, they have a huge liquor, wine, and beer portfolio. I think we're coming not only into summer driving season, but in the reopening and a third to a half of adults in the U.S. being vaccinated by the summertime. I think we're coming into summer drinking season. I think everyone's going to party this summer, just me, especially when I get through this 65. So you look at STZ, look at the relative strength that's shown. It's just hanging, waiting to break through. I did this one on CNBC. So STZ, I'd like to up my allocation there from the cannabis and the alcohol play. So there's a little debauchery play for you. So, all right, guys. TA team, closing thoughts? Anything we missed?
No, good show. Members, we'll see you in about 60 seconds. You guys can check us out, tradinganalysis.com.
Yep.
Everybody's got a minute to run to the bathroom and pee.
We got it. We got this.
Hey, guys, viewers, should we split this up? Do we throw too much at you on a Wednesday? Do you guys want to see more shows of shorter duration, or do you want to see more shows of the same duration, or do you want to see more shows of longer duration? Let us know what you guys would like to see. We want to be respectful of your time, but also give you as much content value as we can, because that's the world we live in. Speaking of giving content value, please put a thumbs up. Let Google algorithm know maybe that you appreciate the work that my fine team puts in front of you for free every week. And we thank you for spending your Wednesday with us, guys. Really appreciate it. Thanks, guys.
Sounds good. See you guys next week.
Hi, if you don't know me, I'm Todd Gordon. I worked in the trading markets as a profession and a passion immediately following college 19 years ago. As I've grown older, my trading and investment style has changed. As I've grown as a trader, my holding period for my investments was also growing longer. I was learning firsthand that being properly allocated in the right stocks and sectors on a longer term time frame with proper hedges in place and the idea of compounded returns are the keys to building real long-term wealth for most of the investing community. You can short-term and swing trade the stock and options market if you like, but do so with a very small percent of your capital. And by no means should you be trading with a majority of your investable assets or your portfolio. For our clients at Trading Analysis, we recommend that you don't trade with any more than 20% of your portfolio in the strategies for our members at tradinganalysis.com. The rest should be managed by a professional financial planner. So last year I ventured out to make a final evolution of my career in the markets. I left the very capable team at Trading Analysis that I built to run the day-to-day operations. I set out to build a wealth management business leveraging our reputation from CNBC and our years in the financial markets. We'll be launching soon, so please keep an eye out for details. If you'd like to be updated as information becomes available, please visit www.tradinganalysis.com/investments. Again, thanks very much for your interest. Look forward to what the future holds. Cheers, and let's get back to the live stream.